Everyone talks about making more money, but nobody talks about the system that actually keeps it. I know people earning $200,000 a year who are broke, and I know people earning $60,000 who are building serious wealth. The difference is not income. It is what happens to every dollar after it hits your bank account. Today, I am sharing my complete money management system that turned my finances around in under 2 years. Step 1 was brutal honesty. I pulled up my bank statements and categorized every single transaction from the past 90 days. Not a budget, not a plan, just raw data on where my money was actually going. I found 7 subscriptions I forgot existed. I found that food delivery apps were costing me over $600 a month. I found recurring charges from free trials I never canceled. Before I invested a single dollar, I plugged these leaks and freed up almost $900 a month. That money now goes straight into my brokerage account at Vanguard every single month automatically. My banking setup is intentionally boring. I keep exactly 1 month of expenses in my checking account for bills. My emergency fund sits in a high-yield savings account at Ally Bank, earning competitive APY rates. I keep 6 months of essential expenses there, and I do not touch it unless something genuinely catastrophic happens. Everything above that threshold gets swept into my investment accounts because idle cash is dead money. Every dollar sitting in a low-interest account is a dollar not compounding in the market. My investment strategy takes me about 15 minutes per month. I buy 3 funds on autopilot through my Fidelity brokerage account. FXAIX, which tracks the S&P 500, makes up 60% of my contributions. FTIHX, for total international exposure, gets 25%. FXNX, a total bond fund, gets the remaining 15%. 3 funds. Total global diversification. Average expense ratio close to 0. I do not trade. I do not speculate. I do not watch financial news and panic. I just buy the same funds on the same day every month and let compound growth do what it has done for the last 100 years. Tax-advantaged accounts are the foundation of everything. My Roth IRA gets maxed out every January because I want decades of tax-free compounding before I retire. My 401k captures every penny of my employer match, and then some. My HSA is fully funded and entirely invested in index funds. I treat it as a stealth retirement account by paying all medical bills from my checking and letting the HSA balance grow untouched. Between these 3 accounts, I am sheltering tens of thousands of dollars per year from taxes. That tax savings alone compounds into a fortune over 20 or 30 years. Passive income changed my psychology around money completely. When I added SCHD to my portfolio and received my first dividend payment, something shifted. Money was flowing in without me working for it. It was only $40, but it represented a system working on my behalf around the clock. Now I hold SCHD for U.S. dividends, VYMI for international dividends, and VNQ for real estate investment trust distributions. Combined, they generate enough quarterly income to cover my utility bills entirely. Every penny gets reinvested to buy more shares, which generates more dividends, which buys more shares. The compounding loop is addictive once you see it in action. End-of-year tax planning is a ritual I never skip. I go through my taxable account looking for any positions trading below my purchase price. Selling those locks in a capital loss that directly offsets my realized gains for the year. The IRS lets me deduct up to $3,000 in net losses against ordinary income with unlimited carry forward for future years. I also make sure any position I plan to sell for a profit has been held longer than 12 months, so I qualify for the lower long-term capital gains rate. One afternoon of tax loss harvesting saves me more money than most people spend a week trying to earn through overtime. The psychological side of wealth building is something most finance content ignores. There will be months where the market drops 10% and your portfolio loses thousands on paper. I have been through it multiple times already. The instinct to sell everything and hide in cash is overwhelming. But every market crash in history has eventually recovered and gone higher. The people who sold during the dip locked in their losses permanently. The people who kept buying got shares at a discount. I keep a note on my phone that says "Stay the course," and I read it every time I feel tempted to do something emotional with my portfolio. This is the complete system. Audit your spending ruthlessly.